So, you've started your business, hired your first employee, maybe created a corporation or an LLC, secured your first customer, but as your business grows, so does your risk. Whether you work by yourself, you manage a team of employees, whether you have a brick and mortar store, you have an e-commerce business, or you provide a service, are you actually protected if something goes wrong? Lawsuits, broken tools, stolen equipment, or even injury to employees can wipe out a business if you're underinsured. But rest assured, this is your crash course regarding every insurance policy that most small and medium-sized businesses need to survive and grow. Every business, no matter the size or the industry, needs insurance. One lawsuit can wipe out years of hard work and revenue that the business has created. It could come from a client, it could come internally from an employee, it could come from unforeseen circumstances, an explosion, a fire, things like this. And so insurance is super important to make sure that you're protecting what you worked so hard to create. When we do consultations with business owners, one of the most important and relevant policies to almost every business is a general liability policy. First of all, let me explain to you what liability refers to when we talk about with insurance policies. Liabilities is considered third-party coverage. The first party is you, the insured. The second party is the insurance company. The third party is anyone else, right? So if the primary named insured or their business somehow causes bodily injury or property damage to a third party, that's what insurance covers. So when we hear liability, we're talking about coverage for third parties. The general liability policy covers businesses for a number of different risks. If you have a brick and mortar or if you have a actual office, then that will cover you for trip and falls, right? If you just mop the floor and the floor is a little bit wet, somebody trips and falls, then that would be covered if they sustain bodily injury. There's also something that we call products and completed operations. If you sell a product and that product causes injury to someone, or a completed operation. Let's say you're a contractor and you built a deck for someone and that deck somehow collapses. Maybe it was faulty work, maybe you used faulty equipment. Whatever the reason, that's what a general liability will cover you for. Another portion of a general liability policy is personal and advertising injury. Libel, slander, defamation of character. If you post something derogatory or negative about a competitor, maybe on your social media, or leave a review somewhere and they don't like it, or maybe it's perceived. But regardless, if a suit comes in that realm, a general liability policy would cover you for it. General liability policy also has another coverage called damage to rented premises. What that means is if you rent an office, if you rent a store somewhere, and something that you do in the store causes damage to it, then your policy would cover up to the limit of your policy coverage for that. Finally, there's something called medical payments, med pay. Let's just say if someone gets hurt, but there is no need for proof of fault, right? So in other words, it doesn't matter if you were negligent or if the person was just clumsy and they just fell on your premises, right? The MedPay is a no questions asked, here you go see a doctor, go see a chiropractor, whatever the case might be. It's not for major injury where you were found to be negligent. That's what your limit of liability will cover if appropriate, right? So that's what a general liability policy is. Generally speaking, we want to package the general liability policy with a commercial property policy. So for example, if you have an office, you want to make sure that you're protected against things like slip and falls if a customer comes to your place of work, but you also want to make sure that you're covered in case there's a fire or somebody breaks in and steals your desks and computers and things like that. That's commercial property. Usually, these policies have to be purchased separately. If the risk is lower, meaning for regular businesses, like let's say a restaurant or a attorney office or a professional office setting, we can combine these two into what we call a business owner's package, a BOP for short. But if the risk is a little bit higher, let's say maybe a contractor, maybe a trucking company, things like that, then we'd have to break these into separate policies. Now, one thing that I wanted to discuss as well is on a general liability policy, there are a couple of endorsements that you can add to it to enhance the coverage or cover things that it normally by itself wouldn't cover. The first one is called EPLI, Employment Practices Liability Policy. The EPLI is a policy that covers businesses against suits that are brought on by current and former employees, suits that have to do with things like harassment lawsuits, or wrongful termination lawsuits. The other coverage that you can add to a general liability policy is called hired and non-owned auto. If you travel and you rent a car, that would be considered a hired auto. The next policy that is very, very important for businesses is called a workers' compensation policy. Now, a workers' compensation policy is for businesses that have 2 or more employees. Generally speaking, the executive team, the ownership, are not listed as covered individuals on a workers' compensation policy, though they can be. It's usually their choice. But to have a workers' compensation policy, you must enroll minimum of 2 people. The executive can count in that count. So when you hire your first employee, you can purchase a workers' compensation policy. Workers' compensation policies are the law in California and a lot of other states. It's mandatory when you have employees because this policy covers employees in the course of their work. So if an employee is injured during the course of their work or while they're traveling for work, this policy will cover them. So it's a very, very important policy. The next important policy is called professional liability, or errors and omissions. When I say malpractice insurance, right? Everybody automatically knows what that is. Malpractice is meant for medical professionals, but what if it's accountants? What if it's an attorney? What if it's an insurance agent? Those are called errors and omissions, or professional liability. This covers businesses against errors that are made in the course of their day-to-day service or work. And it's very, very important that most businesses that this applies to have this coverage. Those policies that I just mentioned are the most important for many businesses to consider. The following policies are also important, but it doesn't apply to every business. This is tailored towards certain types of risks, but I wanted to inform everyone and just make sure that everybody understood the type of policies that are available. The first one is called directors and officers. Directors and officers coverage covers specifically businesses that are larger, have a executive team or a board of directors or managers, vice presidents, anyone that is in the upper level of management that might be named individually in a lawsuit against the company. In those scenarios, the company's either GL or professional liability policy would cover the company's risk, right, against that lawsuit. But if the individual manager is listed in that lawsuit, then that is something that wouldn't be covered under a professional liability or general liability. You would need a directors and officers policy for that. Another policy that's important for businesses is commercial auto. So if your business has a vehicle that is registered to the business that you use for the course of your business, it is important to consider getting a commercial auto policy. Of course, if we're talking about artisans, like for example, a plumber, a electrician, where they have vans and they have their tools in it, that's one thing. But what about real estate agents? If the car is registered to them personally and they use it for the course of their work, it is very rare, but it is possible that their car could be covered in their personal auto insurance program as long as the carrier is aware that they use it for work. Many times it's been our experience that those individuals need to get a commercial auto policy for their car, even though some of the time they use it for their personal use. Keep in mind, just because we say commercial auto, it doesn't mean that the premium is going to be through the roof because it's for a business. Sometimes it's been our experience that commercial auto policies are actually less expensive or right at the same level as the equivalent policy for an individual auto. Now remember, just because you have a commercial auto policy, if you're a contractor or if you're a artisan of sorts, doesn't mean that that policy will automatically cover all of your tools in the back. Commercial auto policy covers the van against damage. It doesn't cover the tools or inventory that they might have in the back of their truck. If you have a company like that, you must get another policy to cover the tools and equipment inside the van, and that is called an inland marine policy. Some businesses have a storage unit. They put equipment there or they put inventory there, but that's it. They don't have a brick and mortar per se. They just keep their stuff in storage. The only way to insure those is by getting an inland marine policy that specifically covers those contents in storage as well. The next policy is called a cyber liability policy. Cyber liability is for businesses that keep client data, either locally on a server or online in the cloud. Either way, if they have client data, sensitive information, maybe names, addresses, social security information, payment information, credit card information, then that information is at risk of being hacked. Systems can be breached and that data can be accessed. Cyber liability insurance covers businesses against what the implications are of a cyber attack. So if a business gets an experience with a cyber attack or they have their data hacked, the business has a certain number of responsibilities. First of all, they have to potentially shut down their operations to be able to first investigate what happened and then safeguard against that happening in the future. Sometimes that means that shut the business down, detach all the servers from the internet, do an internal investigation, maybe change some of their equipment out, get an IT company to come in, etc. So there's a certain cost associated with doing that. So there's loss of revenue. Additionally, businesses are responsible for informing all current and prior clientele about the data breach. Cyber liability policies cover businesses exactly for this risk. So if you have a database of client information, this is very important for you to consider getting. Another policy that I think is important is called excess liability or an umbrella policy. Excess liability is just what it sounds like. It puts an excess coverage over the existing limits of liability for customers. So we talked about general liability policies earlier. Let's say the general liability policies per occurrence limit is $1 million. That means that the policy will cover your business up to $1 million for any potential claims that can come out. Some businesses have a higher risk. Let's just say we're insuring a flight school. Well, that is a little bit of a higher risk business than, let's say, a nail shop down the street, right? And so if we have a general liability for the nail shop with $1 million per occurrence limit, and then we have $1 million per occurrence limit, same general liability policy for a flight school, heaven forbid something happens with the airplane, well, that could cause a lot more damage. It's very important that businesses properly assess their level of risk so that they can properly make sure that their coverage is adequate for the risk that they are operating with every day. This is where excess liability and umbrella policies come into play. So if you have that same flight school with $1 million per occurrence limit, you get an excess liability policy for, let's say, $9 million. That means that $9 million will sit on top of the $1 million per occurrence limit and increases the per occurrence limit to $10 million for every claim that comes in. Umbrella policies are very similar to an excess liability policy. The difference is that umbrella policies sit over multiple policies. So for example, let's say I have a flower shop and I have a general liability policy, but I also have a commercial auto policy because I have a van that I deliver flowers with. An umbrella policy would sit over and increase the limits of liability for the general liability as well as the commercial auto policy. The reason that an excess liability policy exists and an umbrella policy is because certain risks, certain types of business, the risk is too high. So insurance companies don't offer an umbrella policy for those types of businesses. So we just have the option of getting an excess liability policy that sits over individual policies. For businesses that have a lot of employees, and by a lot, I really mean over two, okay? But most businesses have, 10, 20, 30, 100, or even a few thousand employees. For businesses that have multiple employees, an important consideration is offering benefits to them. Group health, group life, things like that. It's been proven that when companies offer benefits to their employees, their retention rate is much higher. Group health is available, group life, supplemental health insurance options are available, things such as cancer coverage, disability, etc. Another policy that is very important for business owners to be aware of is called key employee coverage. This is a form of life insurance that is placed on a key employee in any business, right? It doesn't necessarily mean that the employee is an executive level or a manager even. It's just a person that is a key employee. If you have a small restaurant, you have one chef in the back, that person becomes a key employee because if heaven forbid something happens to that employee, the business would be basically brought to a standstill. Any business that has such employees where removal of that employee from the business would create a financial hardship for the business could benefit from having this coverage placed on them. Another insurance policy is called a life insurance to fund a buy-sell agreement. So let's say we have a partnership and each partner wants to buy a life insurance policy on the other partner, right? Because if you have a partnership and one partner passes away, then usually the partner's spouse inherits their portion of the business. So now one partner is left running a business with the person's spouse that a lot of times may not have the requisite experience or knowledge to run that company. And so that may create a challenging situation for them to move the business forward. So each partner buys a life insurance policy on the other partner. If one of the partners passes away, the life insurance will pay the other partner the money. Why is this important? Because then the partner can use that money to buy the partner out with their spouse and basically inherit the company for themselves. This is very, very important for especially larger corporations that are very, very unique in the way that they're operated. Those are the most important policies that I think most business owners should be aware of. But what if you already have some of these coverages? As your business grows, you need to scale your insurance alongside it. Regardless of if you have a business or we're talking about your personal policies for your home or your auto, make sure you review your policy annually. There are many changes that most businesses go through on an annual basis. You might hire new employees. You might let go of some employees this year. You might expand into a different state. You might open a second location, whatever the case might be. Make sure you review your policy annually with your agent. So make sure that your coverage still will cover you with everything that you do on a day-to-day basis. Make sure that your policy is adequately covering what you worked so hard for. For more content like this, please like this video, please subscribe to our channel, and let us know in the comments what other topics would you like us to talk about. If you'd like a quote, if you're ready to get a quote maybe for a new line of business with us, go to our website, ArcLightInsurance.com, and fill out one of our quote forms, and we'll be in touch with you promptly to get you moving in that direction. Thank you so much for watching.